Good morning, folks. This is Naima. I'm Chief Market Analyst at Trade, and today we are going to cover something really important, folks. It is about the reversal that we are seeing in the stock market. So what I'm going to do, I'm going to go and have a look at the major financial websites and then allow you guys to understand what, as a professional trader, as a professional head of research for the last 15 years, what exactly is I am looking at when I read these headlines, how I form my opinion of the stock market, and why I think that the stock market is in a crash mode now. So we will do all of that, and in addition to this, we will also look at the major stock markets. And when we refer to the word stock market, we mean the US stock indices. So let's go ahead and then have a look at all of that. But before we do that, as always, it is important for me to go through this slide of disclaimers and risk warnings. Anything which will be discussed in this video can be perceived as an advice. If you are seeking for one, please do consider consulting with your own advisors. Now, I'm going to go onto CNBC. We all know this is a major financial website. This is a tier 1 media, which really gives us a lot of information about the stock market. So all what I'm going to do is I'm going to look through that how the session has been over in Asia. So when I click over Asia, I see that all the major stock indices, the Shanghai is your Chinese index, HSI is your Hong Kong index, ASX is your Australian index, Kospi is your Korean index, and Nikkei is your Japanese index. So what do I see among all of these is that all these indices, they closed in negative territory, meaning the market has closed lower, and that the sell-off has been pretty intense, because you can see the Shanghai index is down by 0.44, the Hong Kong index is down by 1.77. So let's go ahead and have a look at the US market, how the US market closed. Now, this DJI is your Dow Jones index. This represents the top 30 American stocks over in the United States. So you can see that this closed in positive territory. But the S&P 500 index, which represents the top 500 stocks over in in America, it closed in negative territory. The difference between these two is that the Dow Jones represents the 30 stocks, where the S&P 500 represents the 500 stocks. So meaning the S&P 500 is a much better representation of the overall US market. Now, when we talk about the NASDAQ is more about your tech index. You know, when we talk about Apple, when we talk about Microsoft, when we talk about Facebook, so these are more your tech stocks. And NASDAQ represents that. So what we see from there is that the NASDAQ also closed lower. So out of the three indices, we have only one index which closed in positive territory or in green. The other two closed in red territory or closed in red. And this Russell is basically small mid caps. You know, so these are not big companies. These are smaller companies. And then Russell is the name of the index, and it represents the mid cap, medium market cap companies, which are not too big in very simple English. And this is a composition or a combination of 2,000 companies, of those medium-sized companies, right? So what the headline over says is that Dow futures dropped more than 200 points after Fed signals rate hikes until 2023. So what this headline really means over here is that the Fed is going to keep the interest rate lower for until 2023. So that is nearly 3 years from now, right? Now, that is a positive news. So why the stock market has dropped over 200 points? The reason being because the market is not sure how to read this particular news which came out from the Fed. What is Fed? What do they do? If you are wondering that, the Fed is the central bank over in America. It sets the interest rate, and it helps the US economy whenever it needs more help. So during the coronavirus crisis, the interest rates were going up, the central bank or the Federal Reserve came and it started to lower the interest rate, because by lowering interest rate, it helps the economy and it also helps the stock market as well. Why? Because these companies will have less interest rate to pay. So that really helps these companies to grow. That is why we say that yes, that the stock markets are moving higher. Now, having this established, now from this headline, again the question is the why market is going down, why the market fell yesterday by 200 points if the Fed is not changing the interest rate. The reason is when the Fed makes the decision, it is a committee, a member, board members, consider them as a board members. So usually all the board members, they will say that, yeah, okay, we will keep the interest rate lower for the next 3 years. But this is not what happened yesterday. What happened yesterday was that out of the Fed committee, two members, for the first time, they said, no, we do not agree with the current monetary policy, and because of that, there is this understanding in the market that you know what, the interest rate could may not stay lower until that time. So we also have a bigger research piece going on Evertrade's website, so you can always go and read that. But let's now go to the platform, the MT4 platform, which I'm sure all of you know how to use that. So from this MT4 platform, what we have right in front of us right now, this is DJ30. So this is the Dow Jones 30, the exact one, the one that I showed you over here. You see like this one, DJI. DJI is the index symbol. So this is the Dow Jones index. So this is the future. So there are two different type of indices. One is the future, which trades on the future price, and one is the cash index. So in order to see the cash index, I'm going to bring up my MT4 platform, and over here I'm going to bring out the Dow Jones index. So there is the index. There you go. And now we're going to bring out the chart for that. So what this shows is that this is the chart. So on the chart, we have three different moving averages. Again, these moving averages are actually the average price for that index, in this case, for the Dow Jones, for the last number of days. So this pink one, which is in front of you, this represents the 50-day simple moving average, meaning very simple terms that this is the price for the 50 days for this index. And then in yellow, we have the price for 100 days. And then in green, we have the price for 200 days. A rule of thumb or the general technical analysis is that when the price crosses above this, you buy them, and when price crosses below them, you sell them. Now, let's go back to our MT4 platform, which we are all familiar with, and why I think that the market is crashing. So you see like this red candle, this is the price action for today. This red candle is the only price action for today. What it shows is that yesterday, we closed at a much better level. We made a higher high. Why higher high? Because yesterday's high was over here and today's high is right over here. So we have another higher high forming yesterday. But today, the price has not only gone below the low of yesterday, but it has also gone below the low of the day before, and the day before, and the day before, and the day before. So the low of this one, you will see the low number coming over here. So the low of this one, as you can see on that, is 27438. So the low of today is 27424. So this was 27438. This one is 27424. So you can clearly see that this low is, because this one is at 27438, so 438, and this one is 424. So this is clearly a lower low than this low as well. Now, it is also a lower low than that. Now, if I change that to a weekly time frame, we can see that this is the full weekly price action of the last week. So the low was over here, the high was here. Now we are very much trading to the lows of last week. This is not positive for this stock market. And given the fact that the price pierced and went below this 50-day moving average earlier today, again, this is not very positive. But if the price moves back above this moving average and stays above this moving average, then this could be the opportunity right now for investors and traders. What do you do with this? How do you trade this? You can perhaps go buy now and put a stop loss even at the low of this candle or at the low of this candle. So that is possibly the opportunity. But if the price breaks below this moving average as it did earlier, now it is off its lows and stays above this particular moving average, then the next level of support, and remember, support is the area where the price is likely to come and then move back up. So what I mean by that is that the price is likely to come over here and then move back up. So that is what you call the support. So support, right now the support is right over here, right? So that is what I mean. But right now, the immediate support level with respect to this for me is right over here. This area, this particular area is a very interesting area for me when it comes to the immediate support. And the immediate resistance for me in terms of saying the immediate resistance for me in terms of a price is right around this area, the high of this one. So these are the areas that I'm really looking at for now, and then I wanted to see how the price forms. So let's go ahead and form our support and resistance level from a smaller time frame. So what I'm going to do is I'm going to go into a shorter time frame, which is the 4-hour time frame. So when I go into 4-hour time frame, first of all, what I see is that yes, this is a downtrend. How I know that is a downtrend? Because I'm going to draw a trend line by joining the lows, all the lows. So now, as long as the price stays below this downward trend line, meaning the price doesn't break out of this to the upside, we can clearly say that this downward trend is going to remain in place. So, the odds are on the smaller time frame, the odds are that the price will continue to move lower. But because we are quite close to our support area, again, the support area is where the price is likely to move back up, and I'm going to draw that support area right in front of you right now, and it comes right over here. This is where I think that the price is likely to move. So let's say if the price comes, it continues to come into this area, and then it consolidates, meaning starts to move back up, and then it moves back to the upside. That would be quite good. Or let's say that if price doesn't do that, and if the price considers as it is right now, right over here in this area of support, and if the price starts to move back up, then the possible trade is the moment that the price breaks this downward trend line, that breakout, this is called the breakout trade. So the price, the moment that it does that, that could be the opportunity for you to go to the upside. So that is where we are really focused on. So once again, to recap, with respect to the Dow Jones Index, I am looking at the resistance. The is going to be in around this level. So this is my resistance. This particular candle, and then this area is my support. Again, resistance is an area where the price is likely to reverse. So for example, when the price breaks over here and it goes into this area, I expect the price to consolidate or even move lower. If it doesn't do that, and let's say if it continues to consolidate, it can move back to the upside. Now, if we look at on the daily time frame, our these resistance areas, but once the price breaks above this downward trend line, I think it is likely that we will continue to move higher. This resistance area may not hold much of a strength, because then what you really wanted to target is the all-time high, which is right over here. So that is the area that you wanted to focus. All right, folks, that's all for today. I hope this helped you. If you like it, subscribe and follow the notification sign. And do let me know, and I can do a lot more detail if you think this is a little bit more complex for you.